Hello, trading has closed on February 15th, 2022. We always start things off with our disclaimer, let's not disappoint. It's my trading plan for tomorrow, February 16th. Remember, I can be wrong. Any trade one makes should be at one's own risk. Yesterday's pattern was one that normally closes near its high, and we said when that didn't happen, it was a negative pattern and should lead to lower prices, even if we didn't close lower, and it didn't mean this low had to fall. It turned out we got the normal pattern after all, because today's open can substitute for yesterday's close, and the fact that we opened over all these highs means we got the normal pattern. But in any event, when you gap smartly in the undesired direction, any call for lower prices is killed before the market opens. Now, we also said if we do get a bear market rally, we shouldn't have to wait too long for another steep decline to begin. So the question is this all she wrote for the bear market rally, or are we going to continue higher and hit these numbers? During the day, MEJT gave an optional lower target in the morning, that printed, gave the same signal in the afternoon, that printed, it gave a buy signal, and that printed. These optional target, the pattern that generates them as mentioned in the book, is kind of glossed over. It's the first pattern I talk about in the webinar that I have, and it doesn't always work as well as this, but it works as well as this often enough. We gapped up, and with 10 minutes left to trade, we're trading under all these intraday highs. It's not a bullish pattern, and the fact that we moved higher in the last 10 minutes when big money had left the table doesn't make it any less favorable of a pattern. Now, all the negativity goes away if we gap up and take out these highs fast, but as of now, especially with futures down, this is a big gap up, which you'll see was a big gap up to resistance and then stalling. So why do we stall? We think we're in wave black C. We've completed red A. Could this be the end of red B? Well, I think this is all three-wave patterns. You can count 3 waves for A, you can count 3 waves for B, you can count 3 waves for C. It isn't the only way to count it. Doesn't mean C has to stop here. But if you do drop from here and futures are down, at least you have a pattern compatible. But that's not the major resistance we have at this price. This is the trend line that goes back 2 years ago. You can see it's been major resistance, major support, right on the nose. And in the last month or so, we've had this consolidation under the line, consolidation over the line. We broke through the line, returned to it, and stopped. So we stopped right at major resistance from a trend line that is 2 years old. And my rule is either you gap over the trend line or the trend line wins. Now you can go past it, but it won't stick if you don't gap over it. And if you don't gap over it, it's a logical place for this move to end. Wednesday's pattern has the early high. We could still gap down. Typically it's a negative day, bearish day with a low in the final hour. If it's strong and said, more strength should follow in subsequent days. Today's rally stopped at significant resistance, a 2-year trend line. Bulls need to gap over that resistance, or the odds increase that it will hold in a new down leg start. Now, just because futures are down now doesn't mean we're going to open down. But tomorrow's pattern has a negative lean to it in any event. And if we don't clear this, this was a spurt to resistance on news, stalling, And if we start down, that could be all she wrote. Won't know that for certain till tomorrow. But stalling after this gap up is not positive action. Tomorrow has the early high, and that's today's call.